Tonight I am going to go over a market review. My apologies. I want to get this video out a little sooner, but my schedule I had to do some other things in between market close and now, so still going to get it out. And remember, everything when we went to the trading day today was framed around the context of the dollar opened. So this is technically tomorrow, Thursday. But looking at this candle, we were trading the indices with the understanding that the dollar came down for this liquidity, came up, and was now moving away from this daily fair value gap and going for this buy side. So you can even see right now it looks like we're gonna take that tomorrow. Next is there this is the daily time frame. Then on the weekly we have this, which ICT has been graciously calling out for us with this weekly fair value gap. So just know that that's the context. So since we had the dollar moving up and away from this fair value gap today, we were going in with the idea of shorts, not longs, shorts. On the daily chart, something I've been reiterating, we went up into this fair value gap, moved aggressively away. So again, this is today. So coming up into this fair value gap was yesterday, and the plan was we are going to open and displace lower. You can see on the 4-hour, Tuesday, we swept this high up here. It's that last high swept. And then on the 4-hour, that allowed us to roll lower. On the 1-hour, you can see right here is our opening of today. So pay attention. Opening today, we came up, swept these highs, tapped into this fair value gap right here. Went just over consequent encroachment, and that was enough to go lower. Going to the 15-minute, I'm going to go to the 3-chart view, and now I'm going to explain what my thought processes were during trading. So one of the reasons why I like to map out or call out these vertical lines is to pay specific attention to what price does during certain time frames. Remember, price, the algorithm runs on time. So you can see on the 15-minute, let me get the 5-minute situated as well. You can see on the 15-minute and the 5-minute. It's a little more clear in the 5-minute. We came up and we swept these London highs during 8:30 New York session. Now, this wasn't the most obvious sweep of liquidity. Normally, it would be nicer if, say, for example, these highs were more even with this, including this one, and it was one come up and come down, but it was still enough to constitute buy side. So it did go up to engage liquidity and then come down. You can see right at the open is when we shot down. I do like to usually wait and see the opening range. Unless there's a really, really good setup, then I'll take it between 9:30 and 10, but normally I wait until 10. In this YouTube channel, if you watched the models and rules video, we only take the 2022 model within 9-10. That it usually shapes up like that sometimes. So you can see here, even on the 5-minute, we had the manipulation above this buy side, we broke structure on the 5 minute, market structure shift on the 5 minute. And then you can see on the 5 minute, this candle entered into this fair value gap. That's a 2022 model. Then we continued lower. On the 1 minute, what did that look like? On the 1 minute, it trailed down. And something, so you can trade before 9:30, but just know that something, I don't trade before 9:30 really ever, but I've noticed, I've been kind of watching this. It trades a little differently than it does than when the market, the indices, like the New York Open happens at 9:30. It trades a little differently. So you can see what it does is it just kind of like, it strings together candles a little faster to get to liquidity targets, it seems like. And when it'll consolidate and string and consolidate and string. So you can see right here, it's kind of goes sideways and then strings together a bunch of down close candles. You can see here on the 1 minute, it tapped in, went right above this up close, tapped into this fair value gap, then sent it lower. So that was the 2022 model. It happened before 9:30. But you can see there's a little fair value gap there, little fair value gap there. Yeah, so we retraced right into that, sent it lower. The 9:30 open, we dropped. And I was coming on and still kind of explaining the live stream when this drop was happening, and I was fine with not being a part of it. I was calling out the fair value gaps on the way down. I did think today was going to be really sloppy and choppy. I thought it was going to be seek and destroy because Powell was speaking at 4, but it turned out to be a decent day. And how did I know that? I know that because you just watch how we respect PD arrays when price moves. So since we took this buy side this morning, what are we going to do now? So when we take buy side and we shift market structure, we're going to go run sell side. Where was the sell side? At that time, the sell side was these lows. Sell side was these lows. So you can see we even took it again. And then when we take it, and you can see that it looks like it definitely wants to continue through it. So we came down, we entered up here, entered the fair value gap. This could technically also be a 2022 model. It would have just been a lower entry. It wouldn't have been the first entry, which is up here. It's just a lower version. Then we took sell side. We came back up. You can see price respected this volume imbalance. The candle bodies respected the bottom of it perfectly. Wick, body, down. Came down. Took more sell side. So then we took this sell side down here. Came down. And then this is why it's important to mark out your levels, because we came down to this daily wick consequent encroachment. And at that point, I was watching and I said, we've moved a lot. I'm going to wait. So we've been moving. And again, silver bullet doesn't happen until 10. So what you get when you're waiting for 10, this is the opening range. It's all information that you need to use. You should start reading price before the market opens at 9:30. So what does that look like? That looks like exactly what I just did on the higher time frames. It's usually easier to do on the 5 and 15, the pre-market, pre-9:30 price. So what did we do? We came up, ran these buy stops, repriced lower, took the sell side to the left side, coming around to this consequent encroachment on the daily wick. I mapped out some fair value gaps. This was a fair value gap on the 2 minute. It never came into consideration. But so I mapped out this fair value gap, and then we came back up into it once, came down, came back up into it. And just seeing these so many candle bodies print at the top of this, I wasn't really interested in going short. We already took out so much sell side liquidity. This is what I was thinking. We already took out so much sell side liquidity. And I was not thinking, honestly, I didn't think we were going to take Monday's low today. But I knew Powell was speaking. We had this large move, and it's just be patient. You know, it already moved a lot. Where is your next target? Are we within the upper 50% between where the move originated and your target? Probably not, since it moved so much. And what do I mean when I say that? So if the move originated with this swing right here, and our target is this, say at the open, it's this consequent encroachment, you're going to draw a fib from the top to your target. And the smart entries, the best entries, are above 50%, because what is this? If this is where the move is starting and this is where smart money is entering their positions, they're going to, and this is our target where they're going to sell their positions, they're only going to enter in a premium to sell at a discount. What is the premium and discount line? 50%. These are all concepts that ICT taught in his core content, and I think he also taught it in the 2022 playlist. So I'd suggest, to get a thorough breakdown, you go see those. But you can see this fair value gap is right above this 50% line. So that's a great entry, or that's still a valid entry. That's a valid entry to target this wick consequent encroachment. So that's what I mean by entering here isn't within that top 50%. And it's good we didn't. Look, we printed all these candles inside of it, and they respected it for the most part. You had this one candle that opened above it and repriced lower, and this was the start of 10. So 10 o'clock started, and what I was looking at was exactly what I just said. So I'm not going to target downside right now because I didn't believe we were going lower at the time, but we're moving sideways. Look, we're just barcoding here. In between this whole area, there is no fair value gap that delivers 5 handles. There's fair value gaps, but there's no fair value gap that delivers 5 handles to liquidity. So no silver bullet happened within the first 30 minutes. So you sit on your hands. When it's consolidating like this, it's good to look at NASDAQ. I look at NASDAQ to see if we can spot any SMT divergences. What did we see? We saw, and you can see this in the live stream. I talk about it live in the live stream while the candles are printing. I said, we had this consolidation, came up, broke down, but then consolidated again. At the time, I identified this breaker. We were below the new week opening gap. I knew since Powell was speaking, I thought at the time we were going to be spending, just hanging around this new week opening gap all day. But I said, you know what? I personally like using new week opening gaps as targets. So I said, we have this breaker. We have the new week opening gap. We have this fair value gap that we respected once and twice. So when I see price respect a fair value gap to the downside, I like to use it as an inversion. So I said, when we consolidated, I said if we would see a manipulation lower and then we aggressively went up and closed above this high, I would enter long. So at the time of me doing that, we were trading against the trend. So today was a down close day and we took a long. When you do that, that's even when it's more paramount to make sure you're taking your first 5 handles, moving your stop to break even, because you're trading against the trend and it's not ideal. But what really tipped our hat to this was NASDAQ. NASDAQ really showed some beautiful delivery on this. You could see in the bottom here, we had the consolidation, the manipulation below these 2 equal lows. I know it's hard to see these wicks, I'm sorry, but you have a wick right here and a wick right here. They're even. Came down, manipulated below the even lows, gets anybody who's trying to buy a breakout short. Look, we've already gone short all day. So when I see this, we've gone short all day. We've ran buy stop to start the run, and then we've tagged sell side. We tagged sell side here. We tagged sell side here. We came down to through the consequent encroachment on the daily. We've taken sell side. So I was thinking price is going to now want to revert on anybody who is long up here and has been trailing their stops. How and when would that be confirmed? That would be confirmed when we come above this high. I liked this high because it's an intermediate term high. What does that mean? It means there's a short term high and to the left and to the right of it. ICT talks about this in his 2022 model. So that's a good video to watch. I suggest going to watch that. That's a really, really detailed video. I should actually go watch that again because he goes really in depth in that video. And it's one of those videos where you need to watch 3-4 times and then you need to go revisit it. It's one of those videos where you got to go revisit months later because there are certain things that you just need to grow a little bit more to understand. Like you need to grow a little bit more and figure things out in price to then go back and understand on like a whole deeper level. So I should go watch that video. But anyways, so we came up, we manipulated below. ES didn't do it. And I said this in the video. I said, I'm going to take this trade on ES, but I like what NASDAQ is doing. And I think NASDAQ is showing it. So we had a little SMT divergence here, but NASDAQ came up. They both came up. And I said, I want to see them both take this high. We came up above this consolidation, and in hindsight, this would have been a good entry. You would have put your stop, at the bottom of this candle that makes a fair value gap. You could have put it below the swing low, but you could also put it bottom of this candle. You can see 1, 2, 3, 4 candle bodies respect this fair value gap, and then it delivers. So I didn't want to take this because I like to wait until candles shift on the 5-minute. I think I found a lot of success when I wait for the 5-minute structure, especially if you're waiting for a reversal. Like, I guess this is kind of a reversal. If you're waiting for a reversal, you have to wait for a candle body on the 5-minute to close. But I use this to say, okay, we are probably in a buy program because we're respecting bullish PD arrays after manipulating below consolidation and shifting market structure. But again, this wasn't, I wanted to see the market structure shift on the 5-minute, and I liked how this fair value gap lined up with this 5-minute high. So I said, if we close above it, I will enter on the retest and use it as an inversion. And that's exactly what I did right here. Entered. It's nice when it also lines up with its own fair value gap. You can see this candle, if you look at the time at the bottom, this candle closed at 10:39, which means it was the 5-minute print that closed above this. I like that. Then we came down. I entered. At the time I was entering this, the dollar was making lower lows. So these were all the things that gave me the confidence to go long after this long drop. The context was we've ran so much sell side. We're in a deep discount. Smart money's going to want to pull it back to run on everybody who is profitable selling short and hit their stops. I'm going to wait to see the signatures that's what smart money is going to do. I'm going to see the consolidation. I'm going to see the manipulation below it, the shift in market structure. And then we enter to the upside. If this was where the move originated and we are targeting this breaker or even the fair value gap low, you can see if this is our target, this is where the move originated. This fair value gap, when it lines up like this, when it's like when the 50% level goes through the PD array, I've found success where you count that as, so if we're going discount to premium, you count it as a discount if it is right in the middle. So we enter. You can even see this candle actually came down right to 50% perfectly. Came down, enter, sold it. Another thing that gave me confidence in this, remember, so one of the rules for the silver bullet is you have to have on ES, you have to have at least 10 handles of probability. So if this is where we enter, 10 handles to the breaker. So we had the 10 handles, we had powerful targets, new week opening gap low, breaker, waited for the market structure shift, retrace down, enter, went long. I ended up exiting, and then I do not, on this account, at least for this YouTube channel on this account, we stick to the 10 to 11 o'clock time frame. So I logged off. Price did end up entering into this breaker. It was a 5-minute breaker, but you could see it on the 15 too. And why I liked this as a breaker was because it took liquidity. So when it sweeps liquidity, I like that. Tapped into it, broke shorter over the lunch period, came down lower. And then it was around here where we ended up taking that Monday low, I believe. Yeah. So right up until 2, we were below that Monday low. I didn't think we were going to get below that Monday low. But we marked out our time, 2 to 3. And then we already had that win on the day. So what I said was, we have the win of the day. We have Powell speaking at 4. I didn't think price was going to be nice in the morning, but it was. How did I know price was right in the morning? Because we watched this. Let me get the dollar. We watched this opening range deliver nicely, and we watched price respect the PD arrays on its way to its targets. So if you see price respecting the PD arrays, the algorithm is behaving as it should. If you see price not respecting PD arrays, when you should sit back and not trade. So what does that look like? Well, this afternoon was a good example. So coming into the 2 o'clock hour, I said to myself, in the morning, we went long on a down close day. And when you do that, they're not bad trades. If you see a good setup and you can get your 5 handles, take it. But those aren't the trades where you can leave a runner and let it run, because if it's going to be a down close day, when it's running, it's going to have to be running in the direction of the daily candle close. So you're going to have to be going short to leave a runner on a down close day. So I was marking out these PD arrays, and I said, we've retraced a lot. I don't want to do what I did in the morning. I don't want to try and catch a scalp to the upside. We're definitely in a down close day at this point. We broke below this Monday liquidity. There's a significant level of sell side. So I highlighted this fair value gap. I saw we respected it. Or actually what happened was we came up and I saw this break, and I liked how it was staying under the sell side low. So it broke lower. I highlighted this fair value gap, and I never entered on it. And I remember I was saying in the live stream, it could come up here and continue lower. But I'm already up on the day. We have Powell speaking in the afternoon. There's no reason to try and push another trade. That's forcing a trade. You don't have to trade every single day. Came down. I believe it didn't deliver 5 handles. Came down to this. Reversed. Came right through it. Chopped up here. Came down. I guess this was technically the silver bullet, this fair value gap, but you know, there's going to be days where it's going to be hard to read. This wasn't obvious enough for me to be comfortable taking it. That's why I didn't take it. It did deliver, but look, it delivered and it didn't even take out that low. So you would have got your 5 handles, but that's not obvious. You could have easily entered on this one and taken a loss. So it's not an obvious one. Don't take it. There's always going to be one, but that doesn't mean you should always be taking it. It came down. You can see price came up, down, but didn't want to take this low. Then we came up through this fair value gap. See, there's no draw on liquidity here. This is like a seek and destroy. You don't want to be trading in this. When we were trading this, I was like, I don't know where the draw on liquidity is. This is the low of the day. If you just try and enter a fair value gap to then take out the low of the day and go and continue, it's a little bit of a gamble. We want obvious, clear draws on liquidity. You can see it came down, and then notice there's no like consistent area it's trying to get to. It's chopping. And this is why you shouldn't get too caught up in trying to draw out all the. I used to fall victim to this. I'm getting a lot better at it, and when I do fall victim to it, I notice is when I start taking losing trades. Don't start drawing out PD arrays and trying to look for which one is it respecting, and try and figure out the draw on liquidity based off of what PD arrays. That's working backwards. You're supposed to find the draw on liquidity and then find the PD arrays, not look at the PD arrays to try and find the draw on liquidity. That's going backwards. You want to know what the draw on liquidity is and then find the PD arrays. And you can see throughout here, we're just, we're coming through we're coming through them, up through them. It's just chop. So this right here is seek and destroy. And we didn't take a trade. It's good that we didn't take a trade. And why didn't we take a trade? Because I knew when Powell spoke, I think the market was just suspended for when Powell spoke at 4. And then you can see, I think he spoke at 4:30. So it's like right around here. But then I don't know what he said, but it doesn't matter because look, we opened with a giant gap down. So as you can see, the market was just waiting. It was being held in suspension to then gap down off of it. So in ICT's vernacular, what happens is the market makers are holding this in suspension so they can use manual manipulation under the guise of a news event. So Powell speaking is a news event. They want to manipulate it lower, manual manipulation. So they hold it in suspension, waiting for the news event, and then they use manual intervention to manipulate it on their own. And you could see the manual intervention. This is it, this gap. This is a suspension. They just held it in. You can't trade it. Nobody can trade it. Yes. So that was the market review. It's my first one. I'll try and get a little better at them. Definitely give this video a thumbs up if you like the market reviews and you want me to keep doing them. I will try and get better at them. Today was one of those days where there actually wasn't too much to review. Just to go over it one more time. When the New York session opened, we came up, took liquidity, buy side liquidity on the 5-minute and the 15-minute. You can see it came up, sent it lower. At the 9:30 open, we dropped. You could see us respecting the PD arrays all the way down. This was a valid entry because it was above 50% from when the move originated to whatever you say your target is, consequent encroachment. And I know that we have multiple levels to this downside, so you could easily say, well, I thought it was going to go like all the way down here, and so depending on where your goal, your target is where your 50% level is going to be. But again, when you're still new, it's just the first low-hanging fruit. So that's this consequent encroachment on the daily wick. After we sweep this sell, after we break below the sell side, that's the next. Just use the next one. Talked about why I didn't want to take this. I didn't want to try and enter long here because that would have just been chasing a move. We already swept so much sell side. Came up, down, consolidated, manipulated below, especially on NASDAQ, below the lows on this consolidation. Went aggressively to the upside. Shift in market structure on the 5-minute. Entered on the retest of this inversion with the target of this breaker in the new week opening gap low. Enter the breaker. And then between 11 and 2, it really just melted its way towards sell side. Again, remember the macro picture. The dollar's going up. We just tapped in the previous day to this fair value gap. We're expecting lower prices, so it delivers lower. Coming into 2, again, we already took out those Monday lows, and you can probably saw this breaker on the hourly. So I highlighted this breaker on the hourly. It was high, low, higher high. I dragged that over during the PM session, and I was contemplating going short off of it, but like I said, I just didn't like the way price delivered right here in this leg up. So, and everyone's short because why I didn't like it was you can see us come up. We broke down, respected a fair value gap bearishly, came down, then respected a fair value gap bullishly, and came up. So it's really conflicting narratives right here. And that really, in my mind, it wasn't a clear run to an inefficiency. So I thought, well, it's probably not going to be a clear run on the sell side of that. But again, you could have entered this fair value gap. This was the PM session silver bullet. You could have entered this going off the narrative of we were tapping into this breaker on the hourly. I believe you could see even the 15-minute candles and the 5-minute candles were respecting it. So there we go, 5-minute. Two o'clock, you can see these 5-minute candles right here. The bodies were closing outside of it on the 15-minute, 2 o'clock. Bodies closing outside of it. So yeah, you could have used that as a narrative to go lower. But again, I'm glad that I stayed out of this. This is very hard to trade. You have to really know where it should stop, where it should turn around. And yeah, see, this just low, high, lower, low, taking out this high, taking out that low, taking out this high, coming down to this low. Sloppy. So that was my market review. Again, I'll do my best and get a little more concise, get a little more accurate with these market reviews. I think I'll also use them to go a little in depth on why I took certain trades. I kind of broke it down here, but I think it'll be good for me to just go more in depth in these hindsight reviews for you guys. Appreciate your time. Enjoy the rest of your night.